Good afternoon. Getting right down to business here. We're doing it live and doing more at 4 weekday afternoons, right when you need it, right after Guy Benson. And just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money. We're live on the air, 790 KBC. Streaming live online worldwide at KBC.com. And your on-demand Mottek On Money podcast, KBC.com, Apple iTunes, YouTube, and all your favorite podcast platforms. Kicking off the new week and coming off the worst two-day sell-off in stock market history was a nervous start today to the trading day in the financial markets. It was a wild and volatile ride on Wall Street, a nervous time on Main Street, too, with uncertainty over President Trump's tariffs on America's trading partners and now recession worries. The stock market ended mostly lower today after President Trump threatened China with additional tariffs of 50% effective on Wednesday. So pretty wide swings between gains and losses today, a real roller coaster ride. The market very sensitive to any tariff-related news these days. We did see the Dow come in for a closing loss of 350 points, well off its worst level of the day, ending at 37,966. The Dow recording its largest three-day percentage drop since March of 2020. The S&P 500 dropping 12 points today to 5,062, its third straight daily loss, also its largest three-day percentage drop since March 18th, 2020. That was, of course, back in those days, the whole global economy was shut down, and we saw the start of a bear market. The NASDAQ composite ended the day up 15 points to 15,603. It was down more than 5% during the trading session and recorded its largest intraday comeback since October of 2008. Back during the Great Recession days and the financial crisis days, looks like last time the day's range was more than 8% was March of 2020, when it was about 8% in the midst of the pandemic-induced sell-off back in those days, back in March of 2020. We saw exchange-traded funds that buy the Chinese stocks tanking today as investors took in the trade war developments following China's retaliation for President Trump's latest tariffs. We're keeping an eye on the stock futures. Looks like they're pointing higher ahead of the opening bell tomorrow. We're also seeing stocks maintaining gains for the session. News of some negotiations over President Trump's tariffs could be helping somewhat today, with the Treasury Secretary Scott Bessent in a social media posting said that President Trump has asked him to open negotiations with Japan's government following, in his words, a very constructive phone discussion. We also heard today from BlackRock CEO Larry Fink speaking in New York today. He said stocks could go down another 20%, and that, in his words, most CEOs I talked to say we are probably in a recession right now, to quote Larry Fink, the head of BlackRock. All of this coming off a rough week last week in which the Dow posted a loss of 7.9%, the S&P 500 plunged 9.1%, and the NASDAQ gave back 10% last week. Crypto is also seeing a wild ride, recovering from an earlier plunge today in a whipsaw day of trading for the cryptos. Right now, Bitcoin up about 2,000, back just above $80,000. Ethereum at 1,582, taking some big hits lately, and Doge at the moment at 15 cents. We're also seeing reaction in the oil markets to all that's happening. The price of oil is at the lowest we've seen since April of 2021, a four-year low for oil. With President Trump's tariffs plans impacting the global financial markets, I'll discuss what's happening with oil, which is hovering at around $60 a barrel now. I'll discuss that with prominent oil industry analyst John KILDUFF at Again Capital and CNBC contributor, longtime contributor to this program. John KILDUFF will be joining me live later this hour. Tesla back in the spotlight, moving lower. Despite producing the most popular new car in the world last year, Tesla's having a rough ride this year with Tesla takedown protests and other boycotts focused on the world's wealthiest man and Tesla head Elon Musk, now locking horns with President Trump's top trade advisor, Peter Navarro. I'll discuss the latest on all that from a PR standpoint. Michael Levine will be joining me live later this hour, PR guru and media expert. But first, on your money, the markets, the economy, crypto, gold, the whole works now. Joining us live, top-ranked money manager, president and chief investment officer at WINANS Investments, Ken Winans. You can find it at WinAnsInvestments.com. Ken Winans also is a market historian, author of numerous books, including his latest, Investment Atlas 3, Creating Wealth Using Historical Trends, also a Forbes magazine contributor. He also has his crypto credentials, and most importantly, he's host of Winning with Winans, heard every Monday night at 6 p.m. on your favorite station, 790 KBZ, although today we have the NCAA championship game that you want to tune in for at 6 o'clock. Ken Winans, thank you very much for taking the call here this afternoon.
Well, Frank, and I would tell the audience it's far more interesting to listen to the basketball and be cheered and root for your teams and all that than listen to you and I tonight. But, boy, Frank, it's been a surreal ride. I know you and I have been through so many corrections and so many different flavors, but at the same time, I hate to say it, it's still all ice cream. And what I mean by that is that, you know, there's never an identical twist to historical events, but I want to give some good news. Frank, I'm going to throw out some good news.
Let's hear it.
Anybody out there, all ears, there's actually a major investment group that has not had any blip at all this year. It's actually up 1% on the year. Corporate bonds. I'm looking at it right now. Dow Jones corporate bond average is up 1% on the year, and that's including the fact it's paying a 5.4 dividend. The other area that, considering all the carnage out there, I always talk about preferred stocks. They're down a whopping 5%, and they're paying dividends around 7%. So here's the moral of the story. In every major multi-year bear market, and I'm going to throw 2022 into the mix and go back to 2000 to 2002. Those people trying to argue this is going to be a multi-year bear market, I'm just going to tell you right now, history is not on your side because the financial assets, and remember, these companies are also affected by tariffs. Those people who have loans on those companies must be somewhat concerned those companies will be able to make their payments. I'm just simply saying that I think that let's wait and see what the earnings data looks like. And I think we are going to find that it's not so much industry specific, but I think it's going to be very tied to company. Have they hedged their costs? Have they done all the things they used to do in the past? Have they done all that? But I mean, I'm pleasantly surprised. As bad as this has been, Frank, I've seen days and you've seen days where the market was all red. And I'm looking at today in this massive, oh, and by the way, for anybody who kept wondering of the classic definition of a capitulation when the market was looking like it was not going to rebound, anybody who sold their stocks this morning at 8 a.m., you must feel like a complete fool right now because the market's up about 1,000 points from where that point was. So you have the capitulation. Now the question is, and Frank, I think this is very important, is this a panic like we had in 2020 or certainly back in the old days? And there have been other tariff-related panics where they're very short-term bear market style sell-offs, or does this go on for a while? I think earnings will tell us whether I'm in the camp of being short-term and whether I'm right.
On the air live with top-ranked money manager Ken Winans on a day in which we've seen a mixed finish for the market, well off its lows of the day. The Dow closing down 349 points, the S&P 500 down 12, and the NASDAQ gained 15 points after a wild ride. Haven't seen a move like this intraday, Ken, since the 2010 flash crash. I was on the air when that happened at that moment, and I remember doing an extended business report minute by minute as that whole situation. They were blaming it on a fat finger or something back in those days. I don't think they ever figure out what happened in that situation. But now with this tariff torpedo, as it's been called, and a lot of concerns here, you think the worst is over here? Or what's going to be ahead this week with China tariffs kicking in and the other discussions continuing?
Well, look, I think there's something to be said about the old phrase, it's baked into the cake. And I think that the market has already absorbed all the possibilities. And by the way, in all this talk about recession, again, you're going to get different definitions of a recession from some people versus others. All I can tell you is I live in the Las Vegas area. Go down to the Strip tonight, and I'll tell you what, with March Madness going on, there's nobody stopping to buy their beer because of what happened this last couple of weeks. So let's wait and see first. I also think we've got to see what's going on in the real estate data. Again, I'm not going to buy into this thing completely being a full-blown recession if you have housing holding up. Again, I think you can talk about it being an economic, crosswinds. But Frank, I think at the end of the day, we're just going to have to just, try to calm down a little bit, accept the possibility that we saw the low this morning. but it doesn't mean we're going to suddenly take off and hit new highs. I thought very quickly at the beginning of this year that this would be a single-digit year one way or the other at the finish. And I still think that could be the case. I mean, for instance, Israel just came out today, and by the way, I'm not a trade expert, but I was watching the press report, or the press between, President Netanyahu and President Trump, and Mr. Netanyahu flatly said tariffs are going to be removed. We're going to take care of the trade deficit with the United States. I think we're going to hear that over and over and over again. I think some countries culturally have to save face. They have to do things differently. But I think at the end of the day, this reset is not necessarily a bad thing. If you can connect the dots and think of 2022 being an interest rate reset off 0% yields, we're never going to go back to that world. And this is now a geopolitical trade reset. In both cases, certainly 2022, we made it for the lost ground very quickly. It could happen the same way here. But to answer your question, Frank, yes, I'm willing to stake my reputation as somebody who's been managing money for over 30 years. I really do believe we saw the low.
On there live with money manager Ken Winans, top-ranked money manager at WINANSinvestments.com. And let's turn to crypto here for those that really like a wild ride. We saw Bitcoin in the low 70s, right? Now it's up above 80 again. What about cryptos here?
The thing about cryptos is that, I think, we've learned that any thought that this was going to be a place to run to for cover during geopolitical things, I think we all know that's not the case. I mean, sadly, some of the traded stocks that are tied to the crypto area, with the one that I watch most closely, Coinbase, has done worse than the overall market. And I just would not have expected that if crypto was really going to take the mantle. So what I've been telling people is, look, if you want to try to trade crypto, you want to try to catch a falling knife, that's good. I'd let things calm down, especially with Ethereum. This whole Ethereum disconnect, for me personally, it is very big news. I think you have to figure out what's going on there first before you begin to make bets. But Frank, going on from there, let's go to the physical assets. I mean, I have been really impressed how, again, we go back to how history kind of divides everything. But I'm looking at a lot of the ETFs that are tied to commodities. I mean, sugar is up 6% year to date. It's actually 2% up on the month. Now, remember, these ETFs carry K1 reports for people who don't like them. Copper's actually, held on to most of its gains for the year. What can you say about gold? Everybody keeps looking for a top, and yes, it's pulled back. But again, you're looking at something that's been very stable. It's made a fantastic amount of money. And then, of course, you got silver. So I think that be careful to jump into new because you think it's better, because old seems to be playing by the playbook much more than new is. So again, with crypto, I think it'd be better just to let things stabilize before you start committing new money.
On there live with top-ranked money manager Ken Winans here on Mottek On Money on 790 KBC, taking a look at the tech names. A wild ride for the NASDAQ today, finishing positive. Let's hear it for the NASDAQ, up 15 points today to settle at 15,603 following last week's washout into a bear market territory. Is this, in fact, a bear market here, Ken? And how long is this one going to last?
Well, that's the thing. I'm of the opinion that this bearish territory area will be short-lived, but I do think we're going to enter a new type of market, being range-bound or a trading range. And you're just going to have to be, you really do separate the talent here, whether it's a money management talent or it's the talent at managing companies. And I think you're going to see how this plays out. It's going to be hard to tell, but you can have a good year. One thing I would say to this, it has not been a complete blowout for everybody who has had stocks. I mean, Frank, and I've been on record as saying this for a good part of the last 6 months. I've been a big fan of insurance stocks. Guess what? They're doing great, even in spite of the fires. And even today, they're down a bit today because of these horrible floods in the southeast, but they're still up on the year. I mean, I'm looking at A.J. Gallagher, Brown & Brown, Marsh McClellan, even Affleck, the little duck that we always see in the commercials, Ion. I mean, I can go on down this list. It's not one company, but this might be the only sector that I've seen consistently in the black through this entire crisis. And so I would caution everybody, if you've been trying to catch a falling knife with tech and you've been unwilling to make the allocation changes that are necessary, I'm telling you right now, you're missing an opportunity with the insurance stocks, and especially going into the earnings season. I think we're going to find that management has navigated things very, very well. I would throw one other quick thing out there. Although I am not a huge fan of them, I have heard that annuity sales are going through the roof just because people want the supposed security of those products. Again, those are issued by insurance companies. So I think it's rosy there, and I don't expect a lot of hiccups in the earnings going forward. I would also say, believe it or not, with all the bad news about, automotive parts and all these terrible things going on, I'm looking at the automotive part retailers like AutoZone and O'Reilly. They're both up on the year, 9 and 13%. So again, try not to buy into the bad news, Frank. People have got to look into what seems to be companies that have navigated these waters well, and the stocks have not been punished. And by the way, these are stocks that did well all through 2023 and all through 2024. They've had magnificent runs. Last but not least, energy. I think we have to talk about this briefly. I know that some people are saying, energy stocks are getting killed. You better stay away from them. That's not all true. I've talked before about Williams Group, WMB. It's still up on the year, paying a nice dividend. I would take a good look at some names like that. That one name, it is a wild bucking bronco, but if you take a look at Texas Land, it's a direct play on drillers in West Texas. It's simple TPL, has a nice dividend, and it's performed well. And then Imperial Oil, although it is a foreign company, but again, it's been acting very, very well. So Frank, amongst the wreckage, you can find things to step into. But what I would tell everybody, get your list together now, and as earnings reports get going, I don't miss this buying opportunity. There will be an opportunity to buy some really good names on this correction. Don't miss it, but get your list together now for sure.
All right. The other thing that got a lot of attention the last several days, trading sessions, is the VIX index, the volatility index, the Wall Street fear index, which spiked 50% on Friday, was all over the place today, ranging from about $35 to $60, settling at $46.98. What about the role of the volatility index these days?
I actually use it as one of my indicators to measure oversold positions in the market. And it actually, by what you just described and the fact that it closed, I've got to get it to close calm one more day, but that will officially flip a lot of my indicators to say, hey, start buying.
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of the Sean Ryan Show.
September 11th happens. What is the first thing that went through your head?
September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope? Just learning how to find a new normal.
One of the most tragic events in American firefighter history. You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.
So that's the case. Frank, there's a whole lot of indicators like that. I mean, that they are all beginning to say, hey, look, this market is way oversold and that we probably have hit a low. Again, the question is not so much, have we hit the low? I think we have. The question is, what do you buy? And I just don't think the old playbook of just buying tech is going to work this time. You've got to spread it out. You've got to be in a lot of different places. Listen, I've got to just, you know me, I'm always love to take not so much a swipe, but I have been a long time a foe of this global asset allocation investment strategy that a lot of my competition likes to use. I am looking at the hit that these foreign country ETFs have taken. I would just tell anybody out there who has an advisor that knowingly put them into these areas in the middle of a trade war. I mean, I'm not going to tell you what to do, but I certainly would not work with anybody who is that stupid. And I just think I'm looking at these things this month. Their hits are far worse. And then by the way, we're adjusting this for U.S. dollar. These hits are far worse than if you had just stuck with good old-fashioned U.S. stocks. So you got to do a little soul searching right now on what your strategy is.
Before I let you off the hook, we're on there live with top-ranked money manager Ken Winans at WINANSinvestments.com. We're going to be talking Tesla here shortly, down 6 and change today to 233. What about Tesla here, given the fact that Elon Musk is so much in the spotlight and a lot of things happening surrounding Tesla, and for that matter, some of the other Mag 7 names which posted mixed finish today?
Well, something to kind of think about a little bit, and especially in California, it's the irony of things. The state has mandated electric cars, Everybody knows that. Yeah, they've got a very short window of time to buy electric cars. And the only company that I'm aware of, especially now with tariffs and everything looming, that is an American-made company that can honor that request for the people who really do worry about climate change is, guess who? Tesla. So I think there's going to have to be some serious soul searching amongst the population of California on which way you want to bend things. But no, I think Tesla, although extremely volatile, it's been all over the map for a lot of different reasons through the years. But yeah, I mean, I actually have one of my biggest clients sent me an email before this show telling me, I want you to buy me $100,000 worth of Tesla stock. So I think you're going to find a lot of people out there saying, I'm a believer in this technology. I'm going to believe the political stuff will end shortly. And so, yeah, I think you could say that for people who believe in the technology and they want an automotive stock, if I had to bet on an automotive stock that will perform best over the next 5 years as we come out of this thing, it will be Tesla.
Ken, thank you very much for taking the call here and tracking all this very, very closely at this critical moment. That is top-ranked money manager Ken WINANS, President and Chief Investment Officer at WINANS Investments. You can contact Ken, by the way, at winansinvestments.com. He's also a market historian, author of numerous books. Check out his latest, which happens to be Investment Atlas 3, Creating Wealth Using Historical Trends. And also, of course, most Mondays at 6 o'clock, you can hear him right here on 790 KABC, host of Winning with WINANS. Tonight we'll have the NCAA championship game tonight at 6, but we look forward to speaking with you next weekend at 6 o'clock right here on 790 KABC. Thank you very much for taking the call here this afternoon.
My pleasure, Frank. Have a good night.
Thank you very much. And out to the freeways now, 790 KABC. 790 KABC welcomes Spasmatics coming to the Canyon in Agoura Hills on May 3rd. Tickets on sale now at AXS.com. Right now, caller 9 wins at 1-888-790-5222. Get a pair of tickets to the show if you are caller number 9. Call right now, 1-888-790-5222. Tickets furnished by The Canyon, where music meets the soul. Stock market spazzing out today with the Dow down 349 points at 37,966. The S&P 500 came in for a closing loss of 12 points at 5,062. Wide intraday swings during the trading session today. The Nasdaq managed a closing gain of 15 points at 15,603 after dipping into bear market territory last week following the worst two-day stretch the market has seen in stock market history. Taking a look at NVIDIA, it moved higher by more than $3 today at 97 and change. Apple down nearly 7, back to 181. Tesla down more than 6 at 233. Oil hovering just above $61 a barrel now. We'll talk oil with John KILDUFF, oil industry analyst, and again, Capital and CNBC contributor coming up here shortly. And right now, Bitcoin, which has seen another wild ride today, hovering just above 80,000. Ethereum at 1,580 or so, and Doge at the moment at 15 cents. And now the latest news on 790 KABC. Mottek On Money continues 790 KABC. Mixed finish for the stock market today, well off the lows of the day in what was a wild roller coaster session. The Dow came in for a closing loss of 349 points. The S&P 500 down 12. The Nasdaq closed higher by 15 points. The price of oil dipped below $60 a barrel and closed at a 4-year low today. The price of oil taking a hit on concerns about the global economy. Also, President Trump taking a hard line against Iran. Russia also monitoring the price of oil very, very closely as oil prices have dropped quite a bit since President Trump's tariff announcements. We've seen biggest move in oil prices since the pandemic days back in 2020 when the price of oil briefly went into negative territory, got as low as negative $40 back then when the whole global economy was shut down. Taking all this in now is oil analyst John KILDUFF, who's been with us for many, many years, following all these epic developments, including this past week. And oil industry analyst John KILDUFF, again, Capital, CNBC contributor, longtime contributor to this program. And John KILDUFF, thank you very much for coming to the line again this afternoon.
Great to be with you as always, Frank. And these are certainly epic times, like you just said, very volatile indeed.
Yes. Yeah. We'll take it from the top and give us your assessment here, how these tariffs have impacted the price of oil. And great news for consumers, by the way, not so great news for oil investors. We want to cover all the bases here while we have you on the line here. But give us your assessment of these epic developments.
Well, I mean, today was just phenomenal in terms of the price moves. There, as you were talking earlier, there was that fake news story, as the White House termed it, that there was potentially a pause on the tariff scheme. and that sent everything to the races to the upside. The S&P 500 Dow was up about 800 points. Crude oil got back up to $64 a barrel momentarily until this all unwound. But the roller coaster ride is continuing, Frank. In overnight trading here, we have the Dow up about 500 points again, and U.S. WTI crude oil futures are back above the $61 a barrel mark. The inputs here are just epic is the only word I can think of tonight in that, or I like to joke around that, when you have two folks getting into a fight with each other and they throw big punches at each other, you call them haymakers. Well, it's been nothing but haymakers coming at these markets the past several days here. Today, for example, for oil, it's very difficult to sort of sort out the main driver in a way. For the stock market, you sort of have the pure pain and negative impact on the global economy from the tariffs. And certainly oil is dealing with that. And just this afternoon, when President Trump talked about lopping another 50% tariff on Chinese goods if they don't back off their recent position, that would bring Chinese imports to 100% here to the U.S., if I did my math right. And to the extent China is in particularly getting hit hard by the president, by this administration in this trade war, it's particularly bad for crude oil because it'll hurt the Chinese economy. And China is the key factor in crude oil demand globally. They are the swing demand center, the way the United States and Saudi Arabia really these days are the swing suppliers of crude oil globally. So we have that going on. But the oil market, too, has to be careful of these other focuses of the Trump administration. Iran, as you just mentioned, Prime Minister Netanyahu being in the Oval Office today said that Iran was a topic of discussion. Iran's defenses, as you and I have talked about over the past year now, have been very much degraded by the Israelis. They could easily go in and take out Iran's nuclear infrastructure, which would be a seismic event for the oil market, pushing prices up because of fears, at least initially, over what Iran would do. And, of course, to clamp down on Venezuela and its exports. So we have some push-pull here in the crude oil market. Prices are having a hard time getting much below 60 or even staying there for much of the time. I will say there's been no place to hide, Frank, in terms of the in this market. ExxonMobil, which I just said to hang out in just recently with you, has gotten pummeled along with everything else. I will tell you that what I'm seeing in this oil market, not being able to break 60, be it despite everything we're seeing happening, tells me that if among the first to recover here, after tech likely, is going to be big oil.
Pain on Wall Street, and you would expect better news on Main Street. Nervous time, of course, for the Main Street economy, but many places are seeing lower gas prices, except here in California, where the price of gas is actually more than 20 cents a gallon higher than where it was a month ago, despite the recent drop in the price of oil. I'm looking at regular averaging $4.93 a gallon here in the LA Long Beach area, according to today's AAA fuel gauge survey. $5.29 the average price for premium, both about 20 cents a gallon higher than where they were a month ago. What do you see ahead for oil prices? I mean, gas prices here impacted by the oil price, and why haven't gas prices come down in the face of the lower oil prices here in California?
This is Women's Work with Nicole Khalil.
I wish you health, physical, mental, emotional, financial, social, and most definitely spiritual.
Redefining what it means to be doing women's work.
I would rather have the temporary pain of discomfort than the avoidable pain of regret.
But hear me when I say this. Believe in something. Believe in yourself. That, more than anything, is absolutely woman's work.
This is Woman's Work from Believe. Follow and listen on your favorite platform.
Well, as you know, Frank, we talked about this. If you want to mishandle the energy transition, I have to say California leads that mistaken approach. They don't work together with the other states around California. They have pretty much boxed themselves into a real dependence on imported fuel and crude oil. So you don't catch the break the rest of the country has. Here in the United States, along the East Coast, we have our own refiners. Along the Gulf Coast, we have refiners that make and produce gasoline that gets sent literally to the rest of the country, even here in the Northeast and to New England, as far away as New England. Look, we're getting lower bond yields as part of this tariff pain. We're getting lower gasoline prices as part of this tariff pain. That is something of an offset for most folks. But in California, unless they want to revisit some of these harsh and really over-the-top environmental rules, you're going to continue to pay. And it's actually part of the argument to keep the rest of the country off of that sort of path, because it would be unsustainable and very damaging to the economy, as we saw in the initial invasion of Ukraine by Russia, when oil prices revisited the $100 plus mark, and gasoline prices across the country ripped up towards $4 and $5 a gallon.
Any final thoughts here from an investment standpoint where you might be placing your bets here at the moment?
There's going to be a turn here, Frank. We're going to come out the other side of this thing. And again, I have to point to the eventual targeting of Iran, the situation with Venezuela. I don't see the situation with Russia and Ukraine getting any better. So that's going to keep any hopes we had for Russian crude oil and our products getting back to the global market, not just to India and China, is a ways off. So I think we're seeing support for crude oil prices. ExxonMobil is still going to benefit. Chevron and Diamondback Energy are my three favorites in that sector. Buy them now while they're super cheap.
All right, John, thank you very much for taking the call. We'll continue to follow all this very closely with you, and that is prominent oil industry analyst John Kilduff at Again Capital, also CNBC contributor, longtime contributor to this program. John Kilduff, thank you again very much for joining us live here this afternoon.
My pleasure, Frank. Thank you so much.
Thank you very much, and let's get out to the freeways now on 790 KABC. Mottek On Money continues here on 790 KABC. Elon Musk ruffling feathers in Washington, looking into how many politicians who earn around $200,000 a year have somehow accumulated fortunes upwards of $20 million. Of course, Elon Musk also in the spotlight for running DOGE, the Department of Government Efficiency, as well as Tesla, following the protests, the Tesla takedown protest over the weekend, and some reporting that Tesla's facing a brand crisis. Let's bring in an expert on all of this now, and that would be the one and only Michael Levine, who's with us here, a prominent public relations guru and media expert, also in the marketing world. Michael Levine, thank you very much for taking the call here this afternoon.
My pleasure, Frank. Thank you for sharing your valuable audience with me.
Wonderful to have you with us, Michael. You've been doing this for many, many years, and want to get your assessment here, first of all, on what's going on with Tesla and Elon Musk.
Well, in terms, I think it would be wise to consider this question in two quadrants, a short term and a long term. In the short term, the controversies surrounding Elon Musk, which frankly I don't fully understand. All he's trying to do is save Americans' wasted, corrupted money. But there is a controversy regarding his job, his DOGE responsibilities, and for that, it is going to be a very difficult time for his brands, for Tesla and for other consumer brands. So there's no question in the short term, this is bad news for Tesla. When Americans are burning your product in the streets, that's not a good look for a brand. However, I think that there's a real opportunity for backlash. I think Americans are getting sick and tired, most Americans, not all, most Americans are getting sick and tired of the nauseating sights that they see on television, where a company, forget about a person, a company is being singled out and attacked in violent, vicious, and frankly nauseating ways. So I think there's going to be a backlash. I would think that in the long term, this might rebound well for Tesla and for Elon Musk. But in the short term, it's very difficult and bad news. But as an American, I'm deeply embarrassed by a country that would have people proudly burning, defacing something that they don't personally agree with. I just don't. It's hard to comprehend.
On the Air Live with Michael Levine, public relations guru and media expert, and certainly Elon Musk, who's the wealthiest guy in the world, who runs Tesla as well as SpaceX and other major entities in the tech world. And by the way, he sold all of his places in Bel Air. He used to have 4 places there, but he's cleared out. SpaceX still headquartered here, and certainly I think most people still cheer for the success of SpaceX. We certainly do. So keep on going with the tremendous successes out of Vandenberg Space Force Base and out of the Kennedy Space Center in Florida, and now in Texas, of course, with the biggest rocket in the world, doing great. Elon Musk now, of course, taking also a high-profile role there in Washington, and now with this initiative here, looking at the politicians and how they've amassed tremendous fortunes while they've been in public office. What do we need to know about that?
Well, I think we're in for some very, very challenging news over the next month or two, because there have been numerous politicians on both sides of the aisle, but more, frankly, much more Democratic than Republican, who have gone into public service as in a role of a congressman or senator and made vast amounts of money in a highly suspicious manner, and it seems that Elon Musk is deeply devoted to exposing that, and I think that there's going to be some very, very shattering news for these people. I mean, let's take someone like Nancy Pelosi. Nancy Pelosi is a congresswoman who was paid $179,000 a year. Now, in her career, she's amassed a $50 million fortune. Now, how do you amass $50 million on $179,000 a year? Try that sometime. Well, it's highly suspicious, and I think Elon Musk is going to get to the bottom of some of this and cause massive shock when it's exposed in the way that I think it may well be.
All right, so a lot of blaming the messenger in all of this, don't you think, when he comes up with these revelations?
Course.
Yeah.
It's ludicrous. It's the reason that Elon Musk is controversial is because his enemies have been exposed. I mean, look, think of it this way. If a gang of criminals were caught, do you think that they like the police? Probably not, right? Elon Musk is exposing vast, obscene levels of corruption, waste, abuse, beyond anything that even he thought was imaginable.
Yeah.
I mean, and for all of your listeners right now, working hard, 1 job, 2 jobs, nights, weekends.
Yeah, Elon Musk become an unwanted publicist for all of this, and we're going to continue to monitor what comes out of Doge and everything else from Elon Musk. And Michael Levine, thank you very much for joining us live here. Michael Levine, public relations guru and media expert based right here in Los Angeles, live with us here on Mottek On Money, 790 KBC. Stay tuned now for the News Blitz, 790 KBC.
This is Women's Work with Nicole Khalil.
I wish you health, physical, mental, emotional, financial, social, and most definitely spiritual.
Redefining what it means to be doing women's work.
I would rather have the temporary pain of discomfort than the avoidable pain of regret.
But hear me when I say this. Believe in something. Believe in yourself. That, more than anything, is absolutely woman's work.
This is Women's Work from Believe. Follow and listen on your favorite platform.